Hi, traders. Good morning, good evening, good afternoon, wherever you are in the world. It's Monday. It's a new week. We had a good week last week. We're in the black. Oh, sorry, we're in the red at the moment. This week we've had two trades hit their stop loss immediately as the new week has kicked off, and the one on the chart at the moment. That's the last third one we took on Friday night. The Kiwi short. Kiwi CAD short position, which again started off all right. Sorry, where am I talking about? Yeah, that's 4-hour candle. Sorry, if you just put the hourly candle on. We were short here on Friday night, and on open this morning, it was okay. It was in the money, and it's turned against us. We're over the 20-hour moving average, and we've also broke the 50 1-hour moving average at 82, and we're currently at 82.13. So I might actually close that out before the this session's over, but it might close out before then anyway. But such is life. 3 out of 3 losers to start the week, but we'll see what we look like at the end of the week. Hope your weekend was good. Mine was fantastic. Thank you very much. Thank you for asking. And yeah, the sun's still shining here in London. It's supposed to get to 27 today in London, so hence the silly shirt I've got on today. But anyway, I hope you're well. Hope your trading's going okay. As ever, any questions you've got, any particular assets you want to have a look at, let me know. We're here today. Now we've got so relatively quiet Monday, but there is some significant news given the current state of the politics in the US more than anything. The Empire State Manufacturing Index. Let me just bring the our calendar up. So where are we? Here we are. New York Empire State Manufacturing Index. So it's been negative. Manufacturing's been under pressure for a long time. It's a sentiment indicator. It used to be quite significant. I think when I first started trading, what seems like 100 years ago, this would have been a 3-bull piece of information, because manufacturing was more of a significant impact, and sentiment around it was more significant, and it took a bigger role of GDP of all the developed economies. In the last 30 years, 40 years, manufacturing still very significant from a point of view of feel-good factor for countries. The Chinese grew on making stuff very, very quickly, very, very cheaply, mass products. The globalization obviously helped Japan immediately after the war, and then China and the other tiger economies a bit later in the 20th century, and that's obviously been the bedrock of Chinese growth, and manufacturing still is significant there, and obviously other key Asian economies as well. But as far as the West is concerned, the industrialized old economies, Europe, Canada, North America, USA, it's much more of less of a significant issue. So if we look at the if we just go to the Forex Factory and we look at the little chart here for the Empire State, we got the Philly Fed later on in the week as well on Friday. We'll have a look at what that looks like as well. But Empire State's the New York State, which is obviously significant both from a population and from a productivity point of view, and from a obviously services point of view as well. But it's also significant here from a manufacturing point of view. But as you can see here, let's move this forward. Yes, so following the blip we had in November, and that's all it was, to the upside of over 25, we've been in a negative state of mind, not just in Biden's final few years, but as we've kicked off this new tariff regime obsession with the current president. So negative, expected to come in minus 5 and a bit, or 9.6 from minus 9 last time. Not really going to move markets significantly. The bigger story this week is obviously the dot plots out of the Fed on Wednesday. That's the big event. Obviously, the Fed, we've got Bank of England, we've got the Riksbank in Sweden as well. We've got the Japanese likely to hold pat on Tuesday as well. So it's a big week for central bankers. Today, we've got the G7. That's the major old industrialized countries, the ones I've sort of been talking about. Meeting in rural Canada, excuse me. Obviously, all focus on the deteriorating situation in the Middle East, particularly obviously the ongoing war. You got to call it a war because that's what's happening. Israel relatively unprovoked attack on Iran on Friday, retaliation from Iran over the weekend. Obviously, many civilian deaths, civilian areas being hit in both countries. So yeah, it's obviously rattled sentiment. It hasn't actually rattled the markets particularly. If we look at what's gone on this morning, we just come back to what's gone on before the data comes out. It's still 5 minutes away. Chance to look through what's gone on this morning. If we just look at obviously the key one, safe haven is gold. You can see here on the 1 hour chart, this was the initial reaction on Friday as Israel hit Iran, and Iran had yet to respond. I mean, we spiked to the over the 3,400 level, and we're still holding 3,400. Don't get me wrong, but 3,413. So we've come down. It's sort of markets have really sort of shook this off because I think that they're not seeing this expanding into a wider regional conflict. It's how much damage Iran can inflict on Israel. But a wounded tiger, as they say, or a wounded lion is very, very difficult to negotiate with. So obviously, there were Iran and the US were supposed to speak in the Middle East or about obviously the nuclear development point of view. That was scrapped, but only at the last minute, really. So again, markets haven't reacted from a sentiment wise. Obviously, the main influence also is in the energy market, in the oil market in particular. And again, we haven't really had. We had the initial spike here on Friday. We had another move on open last night because Iran by then had responded, and Israel had attacked again. But since then, oil has been declining through the Asian session and through the European session. We're actually into the 50-hour moving average. So again, you'd be short oil this morning from that 8 o'clock candle. Excuse me, in the European session. So, and we're still sort of an hour ahead of before the cash market opens in the US, and the Asian stock market has actually closed positively, and Europe this morning is also in the there we are. Is also in the green here. This is the hourly chart on the DAX. So this was Friday's worry and close. But we opened positively this morning, and again, another one that's over its 20-day hourly moving average. So this strategy here on the DAX on the hourly time frame will be long from this morning. Same across the English channel in the UK, back to the target level that we just talked about on Friday. So we are back at 8,900 for the FTSE. Only a big, obviously, lots of shorts perhaps around there, closing out this nice long we've had on the FTSE this morning. So. Yeah, you couldn't tell that Iran and Israel were at full tilt war given the markets at the moment. So it's just this idea that we're not going to see an escalation. Obviously, the other key thing about the oil market, let's go back to oil, is obviously the Strait of Hormuz is a key pinch point in the Gulf. If you don't know where the Strait of Hormuz is or what it is, it's a point in the Gulf where the geography narrows, and Iran comes very close to Saudi Arabia, and it's a channel which something like 20% of the world's crude oil goes through. So if Iran wanted to, and that's always been the worry about Iran's actions, they could close that, or a shell tankers in that area, and they've threatened to do that in the past, and indeed have done that in the past. But that doesn't seem to be on the agenda at the moment. So the issue is how much ferocity the Iranians are going to reply to the Israelis, and how much Netanyahu and his clan are wanting to try and take out the regime in Iran as well. That was mentioned over the weekend as well. So regime change. The problem with that, obviously, is that that will perhaps legitimize obviously what's going on between Russia and Ukraine, and obviously anything that Xi Jinping wants to do with Taiwan, that freaks out the West, and particularly the Americans. Apparently, Trump did stop Israel going to try and take out the spiritual leader of Iran over the weekend. Again, that hasn't been corroborated by anybody. You wouldn't expect it to. But Netanyahu saw an opportunity to take him out apparently, and the Americans stopped it or didn't back it. Probably stopped it rather than not backing it. But anyway. Let's have a look what the data is like. It should be out in a minute. So negative is what's expected. Impact on markets, I say, shouldn't be too bad. If we, I don't know what your let's have a look at the dollar. Dollar remains pretty pressured, even though it's had a safe haven lift. So there's a lift for the dollar. Now it's giving up that this morning, but like we've seen in other markets, the dollar's back to being a bit weak. Sorry, euro 115. 17. So euro's holding up this morning again, long here. And let's just bring this down to the 5-minute time frame, see how it reacts to this data. Sort of consolidating at highs, 115.76 this morning, and we're sort of moving up as the data's come across the across the screen. So a big loss. I mean, it's a huge, relatively huge number, minus 16. It's not obviously not as bad as we saw in the panic of March, but it's a negative one. Although it looks like a big differential, and it is in numbers terms, this number, as you can see here, can chop around all over the place. It's can be particularly volatile. January here, it was nearly minus 50. It's minus 45. Here in November last year, it was plus 33. So it's naturally quite a volatile number. So don't read too much into that. But it's the key thing to read would be it's negative. It's much more negative than expected, and it was expected to improve quite significantly. So it's worse than last time, much worse than expected. And it's it's down at a what's this? This is a what's this? This is the for over a year, isn't it? So this is March 2025. Sorry, what am I talking about? It's coming in at minus 16. So it's the worst for 3 months on the back of the uncertainty around the tariffs, and that's exactly what will be hitting manufacturing. So we'll see what the Philly Fed looks like on Friday as well, but that's a negative reading for the Empire State Manufacturing Index, and that would have lifted, no, not particularly, I would have lifted sells on the dollar. One would expect euro, not really here in the 5 minutes, really negligible sort of move there, isn't it? But it's up for the day. No, the dollar's down for the day. Dollar yen 144.20. Up against the yen. Remember the Bank of Japan with their announcement ahead of the Fed this week. Not expected to move. So again, like many central banks, the Bank of Japan seeing their hands tied a wee bit. So yeah, 144. It's still a relatively, still a historically weak yen at 144, but obviously it's not 160 where we were just a few months ago. Biggest beneficiary of the weaker dollar this year has been the Swiss franc, and again, they meet on Thursday. Expected to cut rates, go back to possible negative territory. The Swiss National Bank. So here, a 25 basis point cut, which is what markets are potentially expecting on Thursday from the Swiss National Bank, would bring this back to negative area. So the strength of the Swiss franc maybe pushing the sorry, if we go to the daily time frame, maybe pushing the Swiss National Bank into that move. So here we are down at this .81 level again. Last week, and on Friday we went under 81, we went to 80.60, and we're down, say it's still just holding above 8.81 at the moment, but as you can see, it's had a very good move if you're short this pair and you're a long holder of Swiss francs. Big line in the sand at .81, and that intraday low we talked about before, where we went to here in April in the spring at .80, 30 zone. So Swiss franc on the front foot again. The Aussie 65.25, giving up some of its gains on Friday on the uncertainty about what was going to happen in the Gulf over the weekend in particular, and obviously in the following few days. But again, the 20-day moving average has provided key support area back over 65, and upside targets is 65.50 has been the area. So really, all eyes on the central banks this week, none more so than the Fed on Wednesday, Bank of England on Thursday, Bank of Japan tomorrow, Riksbank from Sweden, the oldest central bank in the world, tomorrow, Thursday, Tuesday as well, and as I say, Swiss National Bank on Thursday, like the Bank of England. So the dollar weakness story continues. So how hawkish the Fed can be on Thursday, only time will tell. But the weak readings for PPI and CPI last week, keeps their hands fairly tied, and rate cuts still pushed out. But what markets are looking for on Wednesday from the Fed are these dot plots. What's their expectations going forward, and how many of the members of the FOMC have changed or adapted or amended their outlook. They start their meeting tomorrow. Obviously, they've been in lockdown as far as the news is concerned for a week or so. So, yeah, all eyes on Wednesday and what actually happens for the Fed, but very much tied by situations and this ongoing uncertainty around tariffs and what its impact is going to be. The data so far, as we keep saying, has held up. The hard data has held up, but markets are still expecting some weakness in that in the beginning of the second half and towards the third and fourth quarter, the end of the third quarter and into the fourth quarter in particular. And then a pivot point, if they haven't cut enough in 2025, as we move into 2026, are they playing catch up again and have to cut rates quite aggressively? Because, nobody, particularly in America, likes to see this chart here where the US central bank is the top of the shop. The Fed has the highest interest rates of all the major central banks. People don't like seeing that in America, and particularly in the White House, and particularly this administration. So see what comes of it all. So dollar has weakened on that Empire State number. Indexes at the moment, futures, the Dow up on the day, having closed quite significantly down on Friday on the worry. Friday we were down 770 points, 1.79%. The Nasdaq was off 255 points, that's 1.3%, and the S&P 500 lost 68.29, 1.13%. So big 1% plus move, as you might expect on what was going on Friday. We've bounced back a wee bit this morning. But we're still an engulfing candle, and we're now, from my point of view, we are back over the 20-day moving average. So see how that fares as we go forward this week, with all the data that could really move these markets. So the Dow is back over its 20-day moving average and up on the day. The DAX similarly, is up on the day but under its 20-day moving average. Sorry, let's just get rid of that. FTSE, as we just saw, was that testing new all-time highs and nicely above its 20-day moving average. The Nasdaq 100 also holding above its 20-day moving average and hasn't really tested down. So again, the market's focus on the tech sector continues. I say it did have a major shakeout on Friday, but we have bounced up again today, and the S&P 500. So again, this is on the you say the Nasdaq 100 looking for new all-time highs at the 22,000 level to the upside. S&P 500 6,000 has been recovered this morning, and let's see how we finish the week as well. 6,100 and the next big line in the sand to the upside from the high here in February for the S&P. So see where we go. Obviously, all the major earnings season is over, so we're into June. We're into the second half of June now. It's the 16th today. Typically, quite a sort of a quietening area. We've got I think the US is closed on the 19th, isn't it? It's jumped on the 19th. So we're into the summer season full blown now. All the universities in the US have finished. Lots of tourists starting to move around again. Driving season's in full swing. So the next 6-8 weeks it is the summertime, so volumes tend to start to slow down now. So if we get to the end of August and we're still around this 6,000, 6,100 level, the bulls will be happy. If we're not down at 5,500 again, as far as the bears are concerned, the bulls will be happy if we're not down at this 5,500 level. But the two key levels for me for the major stock market is obviously the 20-day moving average and the 50-day moving average, which now sits at 5,700. So that's my major line in the sand for global stocks going into the full-blown summer season. So that's where we are. Bitcoin. Sorry, we did gold earlier, and we'll come back to gold in a minute. But Bitcoin got a bit of a whack, obviously, on Friday also. But less so than some other markets, as you might expect. But we did test the 50-day moving average for the first time in a long time. We slipped again Friday, Saturday and Sunday, but we've gobbled back all the worry of Friday, Saturday and Sunday back here this morning, and we're at 106,600 this morning. So we continue to wave higher. I want to say wave high, we're sort of smoothing highs. So again, that's a key line at 209,000, that inauguration day high, and the 111,000, which is our new line in upside target, remains the target to the upside for Bitcoin traders and both sort of holders, obviously, but also traders, because this is still a very not very, but still a bullish setup. We've flattened out here on the moving average, but we've been some reasons for that. So we're still holding to the upside for Bitcoin, the leading crypto in the world. And finally, metals, gold. We'll come back to gold. As I say, it surprisingly not as big as many might have expected on the worry of the attack on Friday. All-time highs, remember, here was back on the end of April at just shy of 3,500, but we are still nicely bid at 3,400. We're still holding 3,400, but we are moving down. So here on the higher time frames for gold, we have the 20-day at 3,340, the 50-day now, as we were saying last week, nicely approaching the big round 3,300. So gold remains very much bid to the upside, although we're down today against the higher time frame trend. So just bear that in mind. And there we go. We've ran into the 50-hour already and bounced off that. So a little compression here between the 20-hour and the 50-hour, and see where the breakout takes us, either down here through all this free space, or back to the worries of Friday, which seems well, anything could happen, obviously, with Israel and Iran facing off and going toe to toe, and any other, obviously, parts of the world that feel empowered. That's the issue when the attention of the world is turned to one particular regime. So there we go. Yeah, we had a good week last week. We were can't remember what we said. We were up again for the week, weren't we? Although we're down to start it's still early days. Where's my trading strategy? Do I put all the data? There we are. So there we are. I hope you can see that. So Friday we were plus 127. Thursday was 234. We finished the week plus 453, and we were plus 679.8 for the first 2 weeks of June at the moment. There's our update from this morning. Our stop loss on Aussie yen was hit, and our stop loss on Euro Swiss was also hit. I said I was going to probably close out that other open trade, which was Kiwi CAD, wasn't I? Let's have a look. It probably hasn't changed anything since I've been blathering on. You never know, though, do you? Kiwi CAD. Let's have a look. Kiwi CAD. New Zealand CAD. Kiwi CAD. Yeah, it certainly hasn't moved back. So I might, as it's breached there, I think I'll probably close this 82, 13, 14 sort of area. I'll post that, run it drifting off up to the stop loss. That trend looks pretty I mean, it's often an end of day situation, but the 1 hour is against me. The 4 hours very much against me, having been moving in the right direction. Actually, I won't stop that out because my stop loss is higher than that for see if it breaches this the 4 hour 20 period moving average. So that holds. We may see some movement back, but yeah, I'll leave that for now because it is an end of day chart take. But the 4 hour looks like that's turned around. The 1 hour already has. And the daily, because it was, it was a big move down, wasn't it? So it was, you'd expect a bit of a retrace, very channel bound, but some of these have been filled. So anyway, I will actually leave that open. So Kiwi CAD remains open. Now, I'm not going to close it after all. So there we go. That's Monday. So it's relatively quiet today, but a huge busy week ahead. So don't, keep your powder dry for opportunities. So the manufacturing summary from today, then the manufacturing index has come in for New York, the Empire State, New York coming at -16 from an expected -6 and -9 last time, so it's much worse than expected. But that's not a surprise given the volatility, or not that much of a surprise it would be if some of the data, given the volatility of this sentiment indicator. But to say lots to come this week. Tomorrow, I think we're around for US retail sales, same time. We would have already had the Bank of Japan and the key ZEW sentiment index out of Germany as well tomorrow. So busier day tomorrow. And it really cranks up. Obviously, for Wednesday is the Fed. Thursday is the Swiss National Bank and the Bank of England. And Friday is retail sales from Canada and the Philly Fed and retail sales. Sorry, and Philly Fed. So see how that features compared to the Empire State from Monday. So take care. If you're not with us, why not? Do come and join us. We're here to help you. 2-step, 1-step to your funded account. It's up to you, the approach you take. The most popular is our 2-step challenge, taking it steady. 8% target for your first phase, 5% for the second phase, maximum loss of 10%. You've got to trade in a consistent, rule-based way to be successful in trading, whatever approach you take, my friends. The beauty of the proptrade.com, we keep you focused from day one. So, but you prove to yourself and to us that you can do this, and then there's some real money is available to you for a very relative small investment. So $85 gets you a $10,000 worth of equity. If you're new to us, you put in new 25, that will actually knock that down by 25%, brings it down to just over $60. If you want a bit more equity, I can't recommend stuff I'm not allowed to, but 50,000, 25,000 is really where I'd be. A few $100s gets you a lot of equity, gives you a chance to take all these trades that you perhaps wouldn't look at because of the you're only trading the majors, but opportunities exist everywhere. There was a big I think I shared it on Discord, didn't I, this morning on Friday? Or did I? I thought I had. I'm sure I did. The COT, here we are. The COT report, the commitment of traders by the CFTC reports every Friday about where the real market is, where the futures and options market is as far as commitment from the players in the market, big brokers, small brokers, private situations. And the quote was here, asset managers push their net long exposure to the US dollar to a record high, i.e. they're short the dollar. So a large expert ramped up bearish positions also on the Aussie and the Canadian dollar as well, and the Kiwi dollar. Meanwhile, the British pound is very much in focus, as we've seen as it's rallied, and silver shorts were also trimmed as the silver market moved up last week as well. So keep an eye out on that. CFTC reports on a Friday. It's, many people ignore it but it's very, very important simply because that's where the real money is, what the players are doing. So interesting. A report on Friday. It's a record short position on the dollar. So anyone say, oh, well, that's the end of it. Not necessarily, but it's just to show that, we've had some, it's built up, and now we're in a position where the most of the market is short the dollar. So so the question is, do you want to get in on that trade? Is there some more to run? Markets believe there is. Or, should we be getting out now? and bagging your profits if you've already been short and seeing where we go after the summer. But at the moment, the dollar remains under pressure from a relatively very strong position, which was perhaps overvalued. Many are arguing so. Again, it may benefit the longer term US economy. Who knows? And it'd be interesting to see what the Fed have got to say, what their dot plots are on Wednesday. That's what everybody's focusing on this week. So take care, everyone. Stay safe. If you got any questions, email us. Get on our Discord group. It's the quickest chat. We're very, very responsive here. You can see this. People are answered instantly by Catson and Thompson and many of the other support teams. So give it a try, guys. You've got nothing to lose. All right. And we're here to help you be successful. All right. Take care. See you tomorrow for what's going on tomorrow already. What do we say? It's retail sales, isn't it, tomorrow? Yes, retail sales the 17th out of US. Again, used to be on a Friday, used to be really market moving. Retail is key for the US economy, the consumer being absolutely key. So see what that looks like. And a nice strong number out of China this morning. So see what retail in the US looks like. Okay, take care. See you tomorrow and trade carefully. All the best, everyone. Bye-bye.